Everybody, welcome to Intermediate Accounting 17th edition. Kiso, Wangan and Warfield solution walkthrough for exercise 1515. This is the Intermediate Accounting 17th edition textbook. Authors are Don Kiso, Jerry Wangan, and Terry Warfield. The question used in the presentation is copyright by 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. And this solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. Also, don't recommend you use heavy machinery as this can induce sleepiness. Ha, okay, let's go ahead and get the party started. All right. So right over here, dividend entries. Okay, so the following data were taken from the balance sheets of Macefield Corporation on December 31st, 2019. So we've got over here, current assets, 540,000, debt investments trading, common stock par value of 10, paid in capital in excess of par is 150, retained earnings is 840. Prepare the required journal entries for the following unrelated items. A 5% stock dividend is declared and distributed at the time when this market price is 39 per share. Okay. So when we have a dividend, there is the date of record, the date of declaration, the date of record, and the date of payment. So the declaration is after the board has approved the resolution to do the stock or the cash dividend. When I have a stock dividend, and if it's a small stock dividend, what I'm going to do is I'm going to debit stock dividend or retained earnings. I'm going ahead and credit common stock dividend distributable. I'm going to credit additional paid in capital common stock. When the amount, so this is the date of on the date of declaration, when the distribution, when the dividend is distributed, I'm going to debit common stock dividend distributable. I'm going to credit common stock at par. Now I also would need journal entry descriptions, all that other fun stuff. So the first thing we need to figure out is how many shares do we have outstanding? So it tells me that my common stock par value of 10 was 500,000, right? Common stock par value of 10 is 500 grand, okay? If my par value is 10, that means that I have a total of 50,000 shares outstanding. So if I'm issuing a 5% stock dividend, what I would be doing is I would be coming over here and say, okay, 5%. So I'm going to issue 2,500 shares for the stock dividend. So when it comes to going through and recording this, what I'm going to do is I'm going to take 2,500 times the market price per share. And it's at 39. So this is going to give me 97,500. Okay. My common stock dividend distributable is going to be my par value times the 2,500 shares. The remaining amount is going to go into additional paid in capital common stock. When the dividend is actually distributed, I would come over here and go through and record it like this. You've heard me say it before, and I'll say it again. No company in their right mind would have a par value of $10 per share. This is the Home Depot, right? They've got 5 cents, and that's kind of high. It's like April 20th. Right over here, common stock 0.000006. This is for Meta platforms, or AKA Facebook, AKA creepy. So I mean creepy in a good way, right? Okay, so right over here, that's kind of what happens for the 5% stock dividend. That's how we would handle this. So these are all unrelated, right? So we're not from Kentucky. Oh, whoa, too soon, too creepy. Okay, the par value of the common stock is reduced to 2 with a 5-for-1 stock split. there's going to be no journal entry. Okay. Rather, what would happen would be is that my shares outstanding, which are going to be, actually, I really shouldn't say that because I drink way too much Kentucky bourbon. So that's probably, I've just totally, it's not good. Okay. So shares outstanding, 50,000. This would be pre-split. If I'm doing a 5-for-1, I'm going to take basically all those shares and give them a new one. So basically now I'm going to have 250,000 shares outstanding. Okay, my par value or my would be at 10. My new par value is going to be at 10 divided by 5 or 2. When I multiply these through, I should have the same total dollar amount in terms of my par value. So that's where we are. Okay. Right over here. Okay, so that's letter B. Okay. So letter C, a dividend is declared on January 5th, 2020 and paid January 25th in bonds held as an investment. The bonds have a book value of 100,000 and a fair value of 135. Okay. So what this is this is a property dividend. So what we're going to do is we're going to do two things, and just give me one moment. Okay, so dividend is declared on January 5th and paid on January 25th in bonds held as an investment. The bonds have a book value of 100,000 and a fair value of 135. So the first thing we're going to do is we're going to go ahead and say debt investments. Okay, trading. We're going to debit this for 35,000. And this is going to be an unrealized holding gain loss on income. Okay, so this is going to be the first step that we're going to go through and do. And so this is going to be on the date of declaration. Okay, and why are we doing it this? Is because we have to recognize the difference between the fair value of 135 minus the book value of 100. Once we've done this, then what we're going to do is we're going to debit dividends or retained earnings, which will eventually get closed out to. And then we're going to put over here property dividends payable. And this is going to be 135,000, okay, which is the fair value of what the property that I'm distributing. On the date of payment, I'm going to debit property dividends payable for 135, and then I'm going to credit debt investments trading for 135. Okay, so that's what we go through and do for this problem 1515. Frankly, in my time of working in public accounting, I've seen stock splits forward and reverse. The dividend declaration over here, I have not really seen for the property dividend, but I'm assuming it's something that you may actually eventually see on the CPA exam. So that was exercise 1515. And I want to thank Wiley for continuing to allow me to go through and to use their questions. Please don't forget to like and subscribe. If there's other solutions you're looking for, please feel to reach out to me in the comments or otherwise. And I look forward to seeing you on the next video. Have a great day.